Welcome back to Finpod, your essential daily financial digest, here to help you make sense of the markets before the bell rings and after it closes. I'm Evan, and whether you're a seasoned trader or just keeping a pulse on the economy, I'm glad you're here. Today's show is brought to you by Fintwit.ai, your go-to platform for real-time trading signals and AI-powered stock analysis. Let's get into it. The conversation is dominated by a few key players. Palantir is seeing some downward pressure, down about 2%, as investors digest a shift in the AI software narrative. While the company recently received praise for its defense capabilities, some high-profile skepticism about competition from Anthropic has traders hitting the sell button. ServiceNow is also feeling the heat, down over 7%. This move follows a downgrade from UBS, which cited concerns that autonomous AI agents could disrupt the traditional enterprise software model. On the flip side, we have some real momentum in the infrastructure space. NBIS Group is up over 6%, riding high on news of a massive new AI factory build in Finland, reinforcing its position as a serious player in the AI infrastructure race. CRWV is surging, up nearly 11%, after announcing a multi-year agreement with Anthropic to support its AI model development, further proving the insatiable demand for compute. Finally, Taiwan Semiconductor is up over 1%, with investors cheering its blowout revenue report, which showed a 35% jump in first-quarter revenue, a clear sign that AI demand is more than offsetting any softness in other chip segments. Looking at the broader market, we closed the week mixed. The S&P 500 slipped slightly, while the Dow also finished in the red. The Nasdaq managed to eke out a small gain. The overarching theme today was the market's attempt to reconcile a higher-for-longer interest rate environment with the ongoing geopolitical tension in the Middle East. With a ceasefire currently holding, investors are looking for stability, but inflation remains a stubborn headwind, keeping sentiment cautious. In the AI economy, the focus is squarely on infrastructure. We're seeing a massive land grab for compute capacity. Beyond the deals we mentioned for CoreWeave, there is a lot of talk today about the broader shift toward agentic AI, autonomous systems that can handle complex workflows without human intervention. This is what's driving the massive capital expenditure we're seeing from the hyperscalers and the infrastructure providers that support them. It's an arms race, and the companies providing the picks and shovels, the chips and the data centers, are currently the most critical pieces of the puzzle. Turning to individual stocks in focus, we have to talk about the divergence in software. While the infrastructure side is booming, the application software layer is facing a reality check. Investors are increasingly asking which companies will actually monetize AI and which will be disrupted by it. This is leading to significant sector rotation, as money flows out of legacy software names and into the hardware and infrastructure providers that are currently seeing the most tangible, immediate revenue growth. In terms of earnings, we had a couple of notable reports. BlackRock, the world's largest asset manager, is keeping the market's attention ahead of its full report, but it's already facing some pressure, down slightly today. Washington Federal also saw its shares dip about 2%. Both companies are being watched closely for any commentary on how the current interest rate environment is impacting their business models, especially on the lending and asset management sides. That's a wrap for today's market action. We've covered the shifting tides in AI, the pressure on software incumbents, and the continued strength in infrastructure. If you found this update helpful, please like, share, and subscribe to Finpod. For detailed analysis and AI-powered stock insights, visit Finwit.ai. Until next time, keep your eyes on the data and your head in the game.